Discord. I need to figure that out. What's going on, guys? We're just talking here. It looks like we are getting some messiness in the market at the moment. That SPY put trade that we broke down on Monday just paid. Let me get this up here for you. Let me pull SPX. Oof. That is brutal.
That's a sell program. That kind of volume, that instantly, it's algo driven.
Yeah.
That's the thing. It won't take much in this market to, I don't know. I guarantee someone had a sell program to get some people out of their position or see how much they can get out of people's position, knowing it's a low volume day, and they're just fucking with us. That's really all it is. But it's a nasty one.
Yeah, and then also just clearing out premium on options. I mean, it's like it's free money for them at the end of the day, which is like really disturbing to think about. But the sad reality of what we live in, that there's incentive to profit there. So yeah, it's absolute madness, man. I don't know. I think that right now that put trade's paying off, and I think that sell side programs are gonna really take the market. Well, I think it's calculated. I mean, there is fear in the market. Everyone's like, this doesn't make sense, and I feel like that huge run that just toppled is, dude. When I saw that run this morning, I had some calls I had to do, so I didn't get to stare at it, but I was like, oh, this is coming down. And I thought to myself, like, I need to get in that trade. But then I was like, oh, I can't watch it as much as I'd like to. But anytime you see that push 552, we come down, we hit 548, we get a little dead cat up, and then it just clears out sell side. Like if you look at that candle right there, and it just cleared that out, it's done.
Yeah, I mean, once we had a clear rejection at 5,500, I was like, all right, this is not ready. It wants to pull back. There's like that was a clear tell. But again, like it's also like don't take today's action with too much like weight, because end of quarter repositioning of portfolios. I did some repositioning today as well on my portfolio. There's some window dressing. So like today's actions is gonna be wonky. We're entering next week. It's gonna be dead, like we called out. Like we have 3.5 trading days. It's the beginning of July. We've had 9 straight positive Julys in the market. I really don't see that streak breaking. Knowing that we have essentially half a week next week, we're entering the month of July where it's predominantly positive. I think we're just going to be coasting. I really don't think we're going to get another leg. I just think it's going to be consolidation in indices, not doing much. But guess who will be outperforming? Like Austin and I have been calling out for the past 2 weeks. We said the indices probably won't be moving much, but we can see the high quality laggers catching a bid. My growth portfolio is up 6% this week. Indices are red. Software is back, and I beating a dead horse how often I was saying it, but this narrative that software is dead has consistently been an annual thing, and same thing happened. You're seeing all the software names we called out: MongoDB, Snowflake, Atlassian, DigitalOcean is an infrastructure player, but like you're seeing all these names catching a bid today, this week, and you're seeing the strength today as well. So I think it's just like, this is the most difficult part about being a long-term investor is patience, and not just patience, maintaining your conviction. The past couple of weeks, if I didn't do the hours of research into Snowflake or had the anecdotal evidence knowing how revolutionary Snowflake will be for the modern enterprise AI tech stack, I might have been like, oh, I'm not going to add in the 120s. Like I might have like gone scared out of my position. That's why it's so important for you to do your research, have your conviction in the names that you own, because that's the only way you can look past the FUD or the short-term noise to get those multi-baggers. Like all of these big tech stocks, Amazon, Meta, we just saw recently, Microsoft, Apple, they've all experienced 50% pullbacks. And I can promise you, years and years ago when that happened for those names, people got scared out of their position. They're banging their head against the wall. Like, I just missed out thousands, potentially millions of dollars because I got scared out of my position due to price action, not business execution. Like, there's a massive difference of identifying stock price disconnect and business execution. And I've been saying it: MongoDB, Snowflake, Atlassian, DigitalOcean, all these names they're executing like you want in the business side. Like their thesis is expanding. Their stock price is broken. There's a clear disconnect. So I love that we got a near-term bounce this week in these software names. Could this be the beginning of a repositioning on the clear winners of 2024, where we're seeing semiconductors like not dipping, but consolidating, which is what you want to see after the massive run they've had, and maybe a repositioning of people's portfolio from those winners of compute, hardware, servers into those lagging high quality names that we just called out. I just called out a couple minutes ago. Like we could be seeing that ahead of Q3, and maybe Q3 will be the quarter of the software names. That could absolutely be the case, especially because there's like 2 months until the next earnings reports. There's been a lot of price destruction on a lot of these high quality software names that there's a lot of gaps that need to be filled. And in those 2 months, if the big dogs or the indices aren't moving, I do think money is going to start getting repositioned into these lagging names to catch a bid. Like Cloudflare is a perfect example. Absolutely necessary stack of the AI modern tech stack. They already filled their gap from that gap down. And why did they fill it before all the other names? It's because they don't really have a software component. It's more of an infrastructure component. If you guys don't know what they do, I won't get into it too much. That's for the Discord group and also what Austin and I are launching very soon. But it's a CDN, content delivery network, where I post something and it allows someone in Africa to instantly see it due to the CDN, the requirements that Cloudflare has. So that they have an interesting element of Apple intelligence. Like if what Apple is doing with their AI, Apple intelligence, like Cloudflare is an immediate impact, and that's catching a bid because of it. And they don't really belong in the software conversation, but they belong in the growth SaaS conversation. But you're seeing them be the first ones to really fill that gap. And I do think we're seeing that with Atlassian already, and we're seeing that with MongoDB. I said Snowflake is lagging, but they will be the next one. I think there's going to be room for a lot of these names to still fill that gap that we've experienced the past 2 months.
Yeah, I'm not gonna lie, I'm super disappointed. I wasn't buying this at $69.
I added 25% at 69, but the valuation's high. That's the issue. It's a very high valuation.
Yeah, there's just clear accumulation there, man. Yeah. And so like we use Cloudflare, all our websites. It does make it like you upload images, they're all hosted there, and like there's no lag and connect. It's
OpenAI uses them. Just let that sink in. If AI is the future, OpenAI is a leader of that. Cloudflare will capitalize off that. And it's a usage based. It's not consumption based, but it's usage based. So fill the blanks on that. If AI is going to be exploding, OpenAI is going to use them even more. Apple Intelligence will use them even more on their new products. Just how ARM Holdings is getting a cut of every single new digital product due to the chip innovation. Cloudflare will also get that due to the content delivery network will be expanding drastically from AI. That's another picks and shovel play.
Well, I got something for you that I think you're going to be really interested in. Hold on, I'm just posting this. This conversation I've wanted to have with you for a while.
Oh God, what?
Get your opinion on. So, like, look, all right. We keep talking about AI, but here's my thing. AI is intelligence, right? Like, almost. Is it considered consciousness? That's my question. It's like, so, like, I want to make sure that there's a clear distinction because there's a lot of these companies that are leveraging LLMs. But not necessarily. I feel like there's a big misunderstanding to where people hear ChatGPT, right? And they go, oh, AI. It's not AI. It's not AI at all.
It's a search engine. Yeah.
Limited model that can extrapolate out based on the data that's been given. Artificial intelligence can, as a human, both go do the research, procure its own thoughts, opinions, ideas, and then also communicate them to the world, make decisions based on that, right? So it can continue to develop itself, I think is like the key. That's my question. Is that the distinction for you? The ability to continue to develop upon itself without a direction given, like without an input.
Yeah. I mean, so LLMs won't be a thing really in a couple of years. It's going to be absolutely commoditized. Every single product will have some in-house LLM. It's not going to take much to create your own in-house one now. It's very cheap actually compared to 5 years ago, and it's going to get cheaper. So essentially what I call LLMs, it's a search engine, just like what Austin just called out. Like you have data stored in there and like you just type something in and it provides you the answer. It's very minimal, the app's ceiling of what you can do with an LLM. It's just an add value
Google
to
Plus.
whatever. Yeah, it's Google Plus,
but it's also not, because it's like it's more convenient to user, but your quality of information is degraded. Now, I think here's what I think.
There's no ads or bullshit capitalism.
It levels up on it. Like, okay, I guess this without being offensive. So there are people who know how to Google things and find answers, and then there are people who do not. Would you agree with that? Like there are people that have an innate problem-solving capability and can leverage Google to find a quick but appropriate solution, right? Or can find detailed and relevant information. So kind of like how to come up with a query, but then you also know how to sift through the bullshit to find the good stuff, the relevant, quality, detailed information. Like, for example, if I look something up medical and I see like, okay, Harvard Medical published something, I'm well, credibility, right? Like there's credibility to it versus like someone goes on WebMD and gets an opinion and goes, oh no, they read an anecdotal opinion and go, that's the facts. Like I'm going to die. Like I have a rash, I'm going to die. Like that's kind of what I mean is like, I think that what ChatGPT does is it gives people that are on that lower, I wouldn't say intelligence, but lower base competency. It allows them to raise their competency right? Because there's no noise. Like they don't have to sift through. They're getting a very clear and concise answer. It's not the best information. It's very generalized, but they're allowed, like, I think it gives them the ability to like learn at a better pace.
So to go off of that, like LLMs essentially give you the data necessary to do whatever you want to do next. AI does that next part for you already. That's the automation part. That's the key difference where like Snowflake, for example, like you have all this data already. Like that's why within 3 months, they created their own LLM and 1/8 of the cost of their peers. Perfect example. It's very cheap and easy now to create your own LLM. So now their AI go-to-market product was like, all right, instead of giving the data to the users and like having LLMs, like they just do the work for that second step, we're going to do the second step for you. And now it's up to you what you want to do with that query that you put in, and we provide the insight what you want to do next. Like that's where they're going to provide for you. That's what AI will do for you. So that 3-step process of query, results, action, AI will essentially do all 3 parts, where LLMs will just do query and results. That's the key difference.
Yeah, I just it had to be mentioned because like I feel like there's so much. So this is a good point, right? You have to know what question to ask. And I think like LLMs do give you a little bit of latitude with that. Whereas like for those that have a core competency of problem solving, like God, I hope he doesn't watch this one day, but like my 12-year-old, right? Like I love the kid. He is so smart. This is what I don't get. I think this is a more generational thing. Like, but you put him in a room and you go, hey, can you figure this out? Like his generation doesn't get it. Like they don't know how to leverage Google. They just don't get it.
That makes sense. Yeah, it makes sense. My 25-year-old fiance doesn't get it still either. Like it's
insane.
Yeah.
So, but all right. I just wanted to ask that because I think that that's something that interests me, and it's something that I think isn't discussed enough, that like you're going to get this like just muddy water, right? The brackish water of like their LLM, but like people keep calling it AI. So then they get thrown into the AI conversation when in reality, there is no AI. Because like as of right now, we don't have artificial intelligence. It does not exist, to my knowledge.
No, we
don't. Artificial intelligence, right?
I think
it doesn't exist.
AGI is the big next thing. Like whoever solves AGI, which is general intelligence. I'm trying to figure out what the AI is. Essentially, it does everything for you. Like it replaces a human, like absolutely human. That's what AGI is, and that's the biggest fear. And nobody knows when that's going to come. Elon says within a year. I think that's wild. I think it's within 5, maybe. But AGI is the next big thing of like wow, like your kid Os, like he can't figure that now, or like a lot of people who can't figure out how to think for themselves, or like do all this stuff before AGI gets created. AGI will prevent a lot of people from like learning those hard skills before it's too late.
Yeah, I mean, dude, that's my thing. Is like I feel like I don't know, like people are gonna get replaced.
Yeah,
it's a scary thing, especially if those models can do like complex problem solving in minutes. You know what I mean?
Like it won't happen right away, but teams of 5 will turn to teams of 4, will turn to teams of 3 sometime next decade. That's just how it's going to go. It's going to be a 40% reduction across the board because of AI. And it sucks, but that's why right now you got to put in those hours to learn as much as you can, because we have this window of opportunity of creating wealth ourselves, because this gap between the wealth and poor, it's going to drastically get wider and wider due to AI in the next decade. So it's really important for, I forgot who I was meeting with. It was a CEO of one of the companies. Like, he made such a great point. He's like, if you think it's hard to be rich right now, in 5 years, it's going to be impossible. So do everything you can right now to get as much wealth, because once that occurs, whoever has money or has that wealth already will benefit. The ones who don't will be left behind. There's no in between.
Agreed. I mean, I don't know. I would agree with you. And I think that has to happen. So I'm going to go a little off track here. This Snapchat chart just turned up. There is a lotto that I'm going to take, and it's like carries implicit risk, like a lot of risk. Like this is 0 to hero, but I would argue that it's pretty calculated. So I'm going to be sharing that. That is a Discord exclusive. So I'm going to post that so that hopefully everyone can get in by the open. I just want to make sure that I nail this expiration so we have enough time. I think we're going to go. Yeah, I think I know where we're going to go. So I'm going to post that in the Discord. I think Snapchat is an opportunity for a little bit of a pickup. I'm going to type this in the Discord for you guys here. And that's expiration. If you want to get in there, links at the bottom. Absolute lotto 0 to hero. I like this. I think it's I think this chart's turning up. I got it pulled up here. On the weekly, we just crossed that SMA, which I like, and we got an easy move to $20. So this could be a nice.
Yeah, I mean, it looks like it wants to fill that gap at $22.
I know, dude. I'm just still so pissed. Like, I streamed and talked about this one so much at $10, saying like, dude, if we get a solid consolidation at 11, this is worth it. And then I took the first trade, which was right here, and we hit like 15, 16, took my 50%, cut out, and I was like, you know what? I'll get back in. And I just never remembered to look at it again. But like, the market hated seeing this at $9. It's like sometimes, man, it's I don't know, frustrating to say the least. But I do think that lotto trade will pay out. This should be a nice 3x pair if it hits. Posted in the Discord, links at the bottom if you want to get in there and get that trade. For those of you in the Discord, it's in the chat. It's a lotto, so it's 0 to hero. It'll either triple our money or we lose it, but it's also only a $30 premium. So it's turn 30 to 100 or end up with 0. I really like it. I think we could hit strike, which means there's a lot of potential. So let's rub it in everyone's faces just for a quick moment. How well this chart is panning out at the moment, because this volume is a confidence.
Undeniable. You can't deny this week's volume in Snowflake.
Yeah. Buy side was extremely strong. And if you didn't listen, tried to tell you, I mean, screamed it to a certain degree. And I hope you listened, because basically, like, so let's say this trade doesn't pan out right now. Here's what you still got. Entry 121. We're trading to 135. So you're at like what, 6.5, 7% return on a large, like that's insane just in and of itself, right? I mean, average yearly return is like 7%. So you win, even if you took it as a trade. Worst case scenario, We define this as our absolute local bottom. That being said, if we break below the entry price, we stop out and exit the trade. From a trade perspective, zero loss. Tons of potential, zero loss. Third, it's just a great long hold where you'd be building up the bottom. So no matter how you were looking at it or we're going to trade it, this was a huge opportunity for you, and I hope you didn't sleep on it. And I know a lot of you are going to say, is it still good to buy here? And I'm going to tell you the same answer of like, we gave it to you then. So like, do as you wish. Like, we gave you absolute local bottom to get a bottom entry, and then we're going to just keep the brag train going, and we're going to scoot right on over here to Tesla to then also let you know that we were literally sitting there live saying, this is it, buy on that Friday. When this was trading, where is it? That was the Monday, excuse me. When this was trading at $141, we were sitting there live saying, bet the farm, I'm in. It's done. Within 3 days, it ripped to 199. Now we're also back above 200. We got our resistance test. Have not broken over yet. The long-term options I'm still sitting and waiting on because we haven't yet broke this key little piece, this little point of confluence right here where trend meets trend. We need to follow that in order to maintain a good sense of just rationality with this trade. Because once we break above 203 and change, we're going to 260s. It's done it every single time. But we need to wait. We need to be sensible about this from an options perspective. Equity perspective, you already had the trade, you win, or you didn't follow it, you lost, and you have to live in that regret for a lifetime. And I hope you don't, because this was a no-brainer. And we talked about it enough that I'm confident to say, like, you could have had it. And if you didn't, then there's a deeper problem, and let's get that fixed for you. Join the Discord, and we'll help coach you up and figure it out. So that being said, was there any bragging you'd like to do?
I actually have 2 new trades I want to bring up right now. Let me share my screen. I always have something. But want to do the bragging, or should we do save the new trades for the end? I think we should save the new trades for the end.
Yeah.
Bragging. Global E. Let's look up GLBE. This is a name I've been pounding on the table for months. Nobody talks about this name. It's a hidden mini monster in the e-commerce secular growth theme. It is an absolute.
This is the Shopify killer one, right?
Yeah, this is the one that's Shopify. They partnered with Shopify for. If you guys don't know, they essentially create cross-border e-commerce transactions. They simplify it. They do everything for you on taxes. Like if you're a Nike store, you want to open up a store in like some weird part of Europe, you go through Global E. If you're a small business, you on Shopify Markets Pro, that is Global E. They just don't call it Global E. So they're infused with each other. But this name right here, they have a monster moat in $1 trillion industry. There's no competitor of what they do of solving the complexity chain. They're only worth $5 billion. They have a 32% CAGR for the next 3 years with an 18% free cash flow margin already. That's a Rule of 40 score of 50 plus. They have thousands of companies join their Shopify Markets Pro that rolled out earlier this year. And management on Shopify and Global E have called out in their most recent earnings. Second half of this year, there's going to be a big pickup on the larger retailers using Global E on Shopify's platform. So that combined with the additional, like, there's such a low attrition rate for Global E. Like, once you go on there, like, it's a less than 2% attrition rate, which just essentially says 98% of people who use it will stay. That shows satisfaction. So the fundamentals line up. Technically speaking, they clearly just broke through the 200-day moving average with volume. They broke this long declining wedge combined with that breakdown in 200-day with volume. So I do think this once I said this doesn't belong under $50. The reason it struggled this year is due to the luxury goods recession in Europe, and consumers are struggling a ton in Europe. That's behind them.
Right.
I think this is a name that's going to
You think that's over?
So I just think this is like one of those, like, Digital Ocean is a perfect example. These 2 names, they're mini monsters in these highly secular growth themes and nobody's talking about. But fundamentally, they are just an absolute monster of what they do. And just these small caps names, they just don't get discussed until they become mid caps. And now everyone talks about them. This is a perfect example. What do you think about the chart on Global E?
I love it. I'm being honest with you. Like, this is very interesting to me. Like, clearly the market rejected 26. And then you look right here, the market said hell no to 26. And then sellers came in and said, hey, let's push lower. And the market once again said, no, thanks. So clearly the bottom is, like, looking at this chart, the bottom's priced in. It's there. It's done. It's there. It's just now where it'll go from here is a different story. So it looks like run up day. So this is a recent IPO. How long have they been in business though?
Oh,
is it just a recent IPO?
So it's a recent IPO. Other issue, half glass empty view. It's an Israeli-based company. So if the thing gets really worse between is the geopolitical issue with Israel, if that gets worse, I could see maybe this gets fall into that overhang of like worries of some top talent having a fight in their war or whatnot. But I don't like basing my decisions on geopolitics because that's just way over my head and who knows. So this is a newer company, but it's been around for quite some time. I think 10 years ago. Let me see. Origination. But yeah, it's within 2 years or 3 years. It's been an IPO. 12 years, 11 years ago, it got founded. So the CEO is founder led. This guy, Shahar, is a freaking genius. Like, if you guys listen to him, he's like, whoa, he's really, really smart. And he's a founder led CEO. Again, like everything that I require for a mini monster multi-bagger, co-founder led CEO, a monster mode and highly secular growth theme, breaking through on a key resistance and breaking through 200-day moving average. Like everything is checking off. Like I just don't see this name not delivering. It's just, I added a ton. It's an 8% position for me now. Like I'm probably going to continue accumulating until the thesis is breaking. Like now that my snowflakes, my MongoDBs, my Alaskans, they're recovering, I can show some love towards my other kids. The ones who I haven't been able to because those software names were just like pounding the table, like no brainer ads. Now I can use my soldiers for something else.
I see that Juan here said that they saw some flow come in for the 50 call for January of 25, about 180,000 in premium on that strike. And
what did I just say? I was like, it's going to be at $50 by the end of the year.
Well, that's why I'm mentioning that. That's super interesting because that means somebody is making a pretty significant bet on that being reality over the next 6 months to a year. And I would say just this right here, that mid-November buying where, market tried to push it lower during a rough month and the market had a resounding suck it. We're not going lower. I think that would buy a lot of confidence.
No, yeah. This is, if you guys, it's not too late to add his name, put it on your watch list. Like, I'm just do your own research. Obviously, it's not investment advice, but like, I love this name. And you're just seeing clear relative strength this week. Like, just absolute, like, it was up 7% yesterday for no news, just accumulation.
Right. So I think it's very interesting because I want to know basically how. So, like, look, the market is disjointed from the economy, and like some companies may experience more growth than others. So, like, stacking this up, because as you explained it to me, Shopify's business is entirely dependent upon them, correct? Or too much of it is dependent upon them.
No, not that much. It's less than 20%.
Shopify's?
You're saying Shopify's business matters a ton for Global E? Like, what was the question?
I thought that was the company that you said, like, Shopify is basically licensing some element.
Oh, yeah. The Shopify's Market Pro is Global E. It's called Shopify Market Pro, but it's the white label service. White label service on Shopify is Global E. Yeah.
Right. So, like, I bet that, like, my guess and my belief, because thesis, what have you, is that platforms like Shopify are going to just continue to see more growth as more, again, the LLMs and all the different scaling tools. It allows highly competent individuals to do a hell of a lot more. And they are basically going to continue, like, people always argue about the 1%. There's a new 1%. And I think it's more of like a 1.5% of people that are just going to eat up all the available business that there is. Because it allows for people to scale a lot more efficiently when they're good, which means that they're going to take up a larger market share of the business right off the bat, which means that there's going to be a higher degree of competition to enter the market, which means that things are just going to get tougher and tougher. But it also means that platforms like this are going to continue to process more revenue.
For sure.
So they're going to grow. But I guess the idea is that, like, if they're needing global E to ensure that growth, why take one? Like, basically, why take the knockoff when you can have the original is what I'm hearing.
Yeah, I mean, so Global E used to have two competitors, main competitors.
Yeah.
One got sold out private equity. The other, Global E, bought. Both competitors couldn't figure out how to solve the complexity chain while being profitable. Global E solved that. They solved it because they have a clear moat. And it's really, again, I forgot to call this out as well. Like, they're at 32% CAGR for the next 3 years, which is wild. Their profits are rising quicker than their revenue. Let that sink in. For a $5 billion or less company.
Story.
It's a margin expansion story. Exactly. Because they have that pricing power. They have this partnership. Like, it hasn't even, like, the inflection point. The narrative is there, but we haven't really seen it fundamentally yet. Once we do, it's going to fly. Absolutely fly.
Very, very interesting. That's very fucking interesting, because I didn't think about that. Like, when you first, so basically, just to give you guys know how much of a, like, Shopify fanboy I was for quite a period of time. Who knows, I haven't talked about it as much, because he basically popped my bubble the minute we met, because I didn't know about the globally dependency. Like, I didn't know who it was. I figured it was just their own platform, right? And then he's like, oh, no, dude, unfortunately, it's not. And basically that kind of kills the thesis I had, right? I thought it was their own technology. So in my head, it's like they become, I mean, in my head, it's like everyone has to use them, but it's like that's how they're positioning it in the U.S. economy. However, sleight of hand, it's really this other company, which I get it. But I think that they'll do well from a marketing standpoint, but I think in the long run, it's going to struggle as a result. So still made a killing. So I'm good on that. And I still have a position just because we have long-term trend strength. And until that breaks, I'm not going to kill it, because I think just the journey back to $100 is there. Whether they have the long-term 20-year mode or not, I think we're heading back there anyway. So I'm going to ride that out. Let's take a quick look at the SPY, just kind of dive in a little bit here, because I know a lot of you guys are, we have to go SPX because my chart is just insane. So we talked a little bit about how we saw this really quick V-shaped recovery the last couple times we had any sort of sell-off, and basically that we haven't really experienced that sell-off since April. And usually we get it monthly to some degree, other than this kind of massive run. I guess you did still see it to some degree. But we're basically operating in these little trend channels here, which are very easy to follow. So the only problem here is that the volume today and on Friday was significant. If you look at it right here, significant volume. Now, counter to that, buyers did show up at 520 and said, hey, this is a buy. So I think what we're seeing right now is pretty much exactly as we've been breaking down, that, like, it's just a lot more of nothing. You know what I'm saying? It's just a lot more nothing. That we're just going to kind of stay stuck here for a little while until 4th of July clears out. We get closer to August, money starts coming back in the market, people start paying attention again. We're just going to have a whole lot of nothing.
No, I mean, I just don't. Maybe I think we're going to be hovering around 5,500 for quite some time. I think it's really telling that I'm not very political. I hate talking about politics, but Trump is a heavy favorite now to win. And capital markets didn't catch a bid. That's very telling, in my opinion, especially compound that with PCE came in line, and actually personal income was actually greater than anticipated, and everything else was essentially in line. Like, it was exactly what the Fed wanted to see. That combined with, like, Trump winning is good for the capital markets. We didn't catch a bid today. Yeah, there might be some rebalancing end of quarter, like a lot of, like, window dressing, but, like, I anticipated, like, once we broke through 5,500 today, we were going to go to 5,540, 5,550. Like, it was going to be a breakthrough on the upside is what I anticipated. We got quite the opposite. So I do think that is telling of maybe a little toppy. Maybe we need some not pullback. We just need some consolidation. The relative strength RSI needs to come back down towards a mean of 50. Right now it's at 74. Price doesn't have to go down for that to result in towards the mean. It could just be consolidating for quite some time, and that'll do the trick. And I do think maybe that's what it is. But these kind of price actions of like going up 20 basis points, all of a sudden we're going down 40 basis points. Like this is just market mechanics. Like don't look into it too much. I think a lot of people are going to be like absolutely bored next month or so, and they're just going to try to fill in these gaps of what the narrative is, and there is none. It's just they're digesting. The market's digesting this massive move of 18% plus in 6 months.
Yeah, and I think that's another thing too, is like, dude, when you see this kind of move, like dating back to April 24, I guess I'll pop that chart back up there. When you look at this kind of move, like it's been clear sailing in what are historically not very clear sailing months. Like they don't usually see, I feel like you don't usually see upside or downside during the summer. Like what you're usually seeing is a whole lot of nothing. Now we got a whole lot of something, which is a good thing. But it's also important to keep in mind that longevity wise, we're still in a pretty good position. I would say market's still weirdly primed to run to 600, which makes no sense. Like none of this makes any sense, but it doesn't have to. That's the cool thing. Western capitalism for the win. It doesn't have to make sense. It just happens. And I think that's kind of what we're going to experience over the next little bit is like one more big historic run. And then I feel like that's when we need to start. Like, I feel like that's when we need to start taking stock of like, truthfully, here are the names that I'm really going to bet my shit on, because at that point, then I could see the market being a little more merciless.
No, I mean, yeah, I do agree. And I also, you brought up a great point I want to highlight even more. What the market does isn't indicative of what the actual economy is. They're not correlated. Right. A perfect example right now is why is the market at all-time highs when all the macro data we've seen in the past 2 months, consumers are just getting destroyed. Retail companies are not doing well due to macro-driven reasons. But the market's at all-time high. Why? The tech companies are driving it up there.
Yeah.
Why again? B2B. They have minimal consumer exposure. Enterprises are flying right now because AI is a once-in-a-lifetime type of like revolution. So they're going to be the bigger will get bigger and bigger. Doesn't matter what the consumers do. But if you look at Levi this week, look at Walgreens this week, you look at all the major
Walgreens
retailers.
Is closing an unprecedented amount of stores.
Every
and
retailer,
their customers. Dude, fuck Walgreens. Yeah, I said it. Dude, they are such a nightmare. The Walgreens by my house. If you're listening, lady who always gives me shit for no reason on prescriptions that you shouldn't do it. Like I'm talking antibiotics. Like my wife had antibiotics. She was like, I can't fill that. Like, dude, what are you talking about? She goes, well, there was other ones filled. Like they didn't work. Clearly they didn't work. Like, it's just madness to me. It's like, I'm not asking you to fill an Oxycontin script here. If like, I get that, right? Like, hey, fill these Vicodin in 10 days. I get it, man. But like, dude, it just is beyond me how they run their business. I mean, they were the first to go with like, hey, pharmacist is out from 1 to 2. And then like at my Walgreens locally, right? This is locally anecdotal, but like sometimes it's till 3. And then it's like 3:15. When you think about the kind of people that are picking up prescription high frequency, it's elderly.
Mm-hmm.
And they're rudimentary scheduled people. You can't do that. You can't be closed midday and then say, we're going to, I knew the moment they closed all the 24-hour stores, if you notice, there was a huge shift from the 24-hour always on. Meijer is a great case in the Midwest, right? 24 hours always on. When I was in high school, you didn't have shit to do. You just go mess around at Meijer, dude, because it's open. You know what I mean? Like that's what you did. And I think that like after COVID, I've noticed that all their stores do not offer that 24 hours anymore. The 24-hour Walmart shut down, 24-hour Walgreens. Those are kind of the core stores that I think had that 24-hour model that I can't imagine was profitable. But I do feel like it drove additional business because I always preferred those stores knowing I could go get it any time I needed to. So I would kind of cater in my mind, that's where I'm going to shop, right? Mm-hmm. And so I think that was a destructive move, whether, I don't know the numbers. So maybe it was really not worth it. But my point is like Walgreens, you suck. You failed, and I'm glad to watch you burn.
Yeah, I mean,
terrible.
That's perfect anecdotal evidence. But yeah, not just Walgreens again, like Levi's, Walgreens, Nike. You just saw Nike today; it's down 20% today. The economy is not doing well on the consumer side, so that's why. To answer your question, like people's question, like why the market's all-time highs when the economy is struggling, it's because the company that are driving it is not consumer related at all. Yes, Amazon has somewhat of consumer exposure, but really AWS, they're the king of cloud computing. That's driving Amazon stock price. Also, what they're going to do in AI and stuff. So be specific of what you're investing in. Like I've been pounding the table. Next 2 years are not going to be good for consumers. Any kind of company with retail exposure, they're going to suffer. Like people's credit card debts, that's not going to go away in an instant. It's going to take years to pay it off if the economy recovers. Like, who knows if the economy will recover by then?
All-time high defaults, right?
Yeah, if look at Capital One's earnings. Just look at that. They it's Capital One's earnings is really bad because their default rate is just like way above what you want for like the bad credits.
Why are people buying banking right now? What the hell?
Yeah, I mean, KRE caught a bid today.
They're posting strength. This is madness. Well, JP Morgan, dude, it was like, for those of you that follow that core portfolio we started building a few years ago, this was a key position we were always adding 100, 110, 80, 90, 100, 110, double our money at this point. I mean, definitely strongest, most well-positioned bank out there. I mean, God, the guy sunk the Titanic. You had to think, like, there's no way he doesn't succeed in life. Just kidding, speculation. But I mean, there's a lot of it. We're just saying. But point is like, I don't like that I have so much money concentrated at Chase. Like all my personal, all my business, like kind of everything is there. And it's
a golden standard. It's a gold standard.
Right.
That's why the argument for SoFi was like, if JP Morgan wanted to create something, a neobank like SoFi, like they would. They have that forward-looking vision. Like the CEO is a goat in that industry. They haven't. There's a reason for it. Maybe there's none of juice to be squeezed or whatnot. I don't know, but JP Morgan is the best of breed among banks. Absolutely. So if you guys want exposure in that, definitely that's the one to do it. You'll always be a leader.
One that I want to listen, what is it? Fuck, I can't remember what it's called. Oh, I have so much of it. How can I not remember? It's an ETF.
So while you think of that,
go ahead.
I put the Discord group link underneath my post of this stream. I got into a massive trade today, and it's a weird one for me. Ooh. I've been wanting to get to this name. I'm not going to drop the name. You have to go in the Discord group to look at it, but I'll tell you why I added. So this name is up 30% for the year still. However, at a 25% pullback the last 2 weeks. So why did I add, and why is it dipping? Well, my thesis in this specific company, it's an energy play, not just energy. I'm not getting specifics of what part of energy, but that's not my realm. But they're going to capitalize the most of this AI and LLM movement within the energy space. Why? The demand is for cheap energy generation will be absolutely wild in the next 5 years. Like the rise of AI and LLMs is going to generate so much demand for energy that you have to go for those cheap energy solutions, especially the ones who create the projects, they create that. I'm not gonna get into too much. I don't want to reveal it, but essentially they're the most dominant position in this specific industry. All their competitors are struggling, but they are not, and their balance sheet is so strong, and they're finally at a point of when I wanted to add. So the ad, let me pull up the chart. I'm not going to show you guys the chart, but there was a massive candle on March 25th of this year that led it to breakouts. Now this pullback happened. I linked up the average VWAP from that exact date, and it's down a decent amount today. And guess where it's bouncing off of? That exact VWAP. So again, these best of breed names in these specific industries, there's going to be a V-shaped recovery because the appetite of having exposure in the energy space to capitalize on this AI theme, there's only a few names out there, maybe 2, maybe 3. This one is a leader. I want some exposure in the near term because I do think it's a clear winner the past year. Winners keep winning in 2024. This is a div opportunity I've been waiting for, and I got a 3% trading position in it, and it bounced off it today, and see where it goes for the next couple of weeks. But I bought Commons because I wouldn't mind owning it long term. It's a good stock. It's not my cup of tea, but it gets me some alpha in this AI theme and a really interesting angle of it.
Interesting. So I also put it on the Twitter live stream. I put it in the YouTube. I also put it in Discord. If you guys want those, he's going to be breaking those down at length in the Discord. Get in there. It's an exclusive, baby. An exclusive.
Yeah, I put my thesis on the company, what they do, why I added, and the next 2 prices on top of it, I will continue to add if it happens. So like I'm handing it to you on the plate right now.
You think it's a big pick? You think it's going to be that one? I love it. So let's continue here and let's talk Unity.
Ooh,
this is one you brought to our attention. I jumped in. I got it. I got a taste. I bought
did you buy leaps or commons?
I got sub 16s. No, I didn't go options yet. So the young intern, the young man, Zachary, he went options. I'm going shares just because I do think the potential for continued downside is like it poses a significant risk. So like, hey, look, I'll buy down on a huge position. Basically, if in my opinion, I have the capital willing to allocate right now. So like, I'd rather just take it at scale than leverage options with smaller capital contribution, because to be honest, there's not much else I like right now at this moment. So to me, I think the juice is worth the squeeze here.
And look at that weekly volume right there. Look at that.
I know, and that's what really kind of like that made me like,
that's a bottom.
Okay, that's I like bottom. This a bottom, baby. We bottom bounce boys now, man. We got Snowflake, this one, Teslonius Jackson, dude. It's all happening, dude. That's like 3, 4, 5 extremely quality, precise ads that I just want to scream about when people are like, "Oh man, I should have listened." It's like, dude, it's like it's not just one. And that's the cool part is we've been doing this separately for a long time, and now we can form a more perfect union, if you will. Yeah. And do it together. And you guys will get a taste of all of it, including the psychotic level of deep dive research that he does. Like, you ain't getting that out of me. Like, he's going way deeper. So it's good for you. That's the point, is that you could sit there at a dinner party and sound like a genius talking to your father-in-law. And you made money. How can you beat that? Think about that. You're sitting down for dinner with your father-in-law, and you come across like an absolute wizard. You just recap what he said. You look like a genius. You made money. All of a sudden, he bought in. He made money. Now you're in charge, and you're the patriarch. Why wouldn't you want that?
No, yeah, you're absolutely right. And to go off of Unity, I can tell you exactly what's going to happen. This is going to, first off, this is a 2025 story. Anything that happens this year is nice, but I'm underwriting the alpha in the second half of 2025. The stock is probably going to bounce, go to $24, pull back at 22 and consolidate from there until they have the clear earnings of like, wow, okay, the fat is trimmed. We can finally turn the ship around. I don't know if that's going to happen this upcoming earnings cycle because the last one is ugly. The one before that was just as ugly. So like, keep in mind, like this is just way oversold. It's dumb in the mid-teens. I just don't think it's ready to fly like the other names we've called out, like the Global E's, Digital Oceans, etc. So like this name, I think it belongs in the low 20s, but I do think there's a low ceiling until they prove it to us. So factor that in. But if your horizon's 5+ years, this is a no-brainer, in my opinion, range to add. Like it's an absolute no-brainer.
I agree. I couldn't agree more. And I think that like just taking it on a trade from the duopoly standpoint, I think makes sense. I mean, new management, obviously huge improvement, better execution across the board, which like that's the biggest failure. And I think that's the earnings drawdown. It's like, wow, we've just shit the bed on all this opportunity alongside market pressure. I think that's like always like that's an underpin note of everything right now is like right now, I think the fear and uncertainty in the market turns even the slightest bit of bad news into like oh shit, it adds an additional like -2 points basically to everything, because then everyone in the market goes, oh man, this is a name that's going to get hit hard, I'm out, because they have general fear about the entirety of the market, right? So when in fact it's the opposite. Like, you just let Daddy Warren tell you the truth here. Like, look at this chart, dude. Like, we're not talking some penny stock nonsense. We're talking about a real business, right? And if you look at this chart, like, again, if everything we're talking about is correct, right? Like new management.
We can't see your chart.
Oh, sorry. But if everything we're talking about is correct, right? Like new management leads to better outcomes, right? The duopoly really starts to take effect in the really the just stark reality of like, no one else is going to be able to break in here. So all we have to do is do a slightly better job on what we're already doing. A lot easier than doing a whole new thing and becoming great at it. Right. And in an industry that's already proven to us, we're here to stay and we're just going to keep growing, on top of an industry that hasn't truly emerged yet, but will absolutely be a core function of how we interact with the world. Apple Vision Pro, perfect example. It's unavoidable. So you have business now. We need to improve a little bit. Yeah, we got some work we could do. New management, that should improve it. Maybe some new processes, systems, maybe shuffle some people around, expenses. Let's reevaluate. Then it's like, okay, we're in a very high growth industry with a very, very sticky audience. And then it's like, oh, by the way, like to follow Google's method, right? 70, 20, 10. 70% here and now we're doing, let's execute better on what we already do well, which is a profitable business, and really, not to say enterprise software, but it kind of like is in and of itself, right? A platform, an Upwork of sorts, in which people develop. It's almost like a private equity model to some degree that requires not much capital contribution. Hey, once you develop and you make money, thanks, we'll take our check now, which is great, right? So you have that element. That's your 70%. Let's do a better job talking to the world about this, getting more developers on task, and also maybe helping them in the event that the game becomes a little bigger than it is. I think there are some really quality B2B partnerships they could leverage to bring better development teams in-house, blah, blah, blah. The 20 is, okay, look, we've done a good job with what we have now. We have somewhat of a moat. We're already pursuing some of these other avenues. We have a huge growth potential in the industry we're in, gaming, right? Then that 10%, that moonshot of a maybe, but it could be a $20 billion venture. Let's dominate AR, VR. No, would you say that encapsulates really what's on the table for them right now?
Yeah, I mean, you nailed it. And to add more color, listen, Meta and Apple are going hard in the AR, VR, metaverse space. So that should be a telling right there of, okay, this thematic is here to stay, because they're going pretty hard right now with the amount of capital they're investing in. So they're putting all the infrastructure or investment-related expenses in this new secular growth theme or market. Who's going to benefit the most? Yeah, those two names will do great, but they're essentially creating this brand new market for names like Unity and Unreal Engine, who are private, and they're doing all the work for Unity. So like, all Unity has to do right now, clean house of all the unprofitable avenues of their business, which they have done, realign their priorities towards developer-focused initiatives, which they are doing, and they messed up on the past 2 years. But they're going back to their roots on that. So again, like it's tricky because at $16, I want to make this like an outweighted position in my portfolio, but it's hard for me to do more than 3% because it is such a risk due to me not being familiar enough with the new management, and the fundamentals are just an absolute mess that it feels more speculative than actual core position. And I will instantly turn that 3% to a 5% as soon as I get the first sign of things are good again. So want to factor that in. Also, us, should we do some look backs in our first couple of names that we called out when we first started this?
Come on. Of course we should.
TMDX, all-time high again today.
Brag, dude.
TMDX.
I love a good brag. And it's not a brag. It's more of like, I don't know how else to scream and shout. I just want you to make money. That's it. Yeah. Don't give me any money. I just want you to commit an hour of your time to sit here to improve your knowledge base for you to make money. I'm going to make it a quick, let's just get close and personal here. I want you to make money. That's all I want. I want you to spend an hour of your time to level up your ability to research and understand the market so that you can take advantage of these very simple and very easy ways for you to profit. Because as was said earlier, unfortunately, if you don't do it now, you're going to be in a very difficult position in 5 to 10 years. Very difficult. And if you're 45 to 50 right now, you don't have that time. You just don't. I mean, you saw, I forgot who the CEOs were. There's just it was like a meme, but there's a video going around where there's a few CEOs joking about like, oh, retiring at 65. They were laughing because it's just not feasible for, in my opinion, for Gen X or millennials at this point, right? Like Gen Z will be revealed, but right now it's not possible. It's just not possible. So quick. Oh, product out of stock, dude. Looks like everybody's piling in to get that free access. I actually saw it flooding on WAP. I wanted to reset it for you guys to get access to his section of the Discord and get access to those picks. One that he just added today. The other one will be a Q3 banger. Let me figure that out real quick while we go into some of these callbacks. Do you want to go through TMDX real quick? Because this is like, you can't,
yeah,
like, this is just stupid. I mean, it's dumb. It's almost a little upsetting, like how ridiculous this chart is right now. And I want to make a very clear point here that you've been in it since
right here. I got in here,
that's
right,
what I'm saying.
You've been in candle right here
for a long time. We discussed this, not there, but still $70. I mean, double your money, double your fun. Sorry, I'll shut up.
So look at this weekly candle right here. Look at that. This is another bottom sign. This is Ozempic caused drive down. Everyone that was medtech related was getting gap down for weeks because Ozempic is supposed to cure all illnesses. You guys don't know what Transmedic is? Organ transplant services. So essentially, if I need a liver in Austin, something happened to Austin and his liver matches with mine. Before he lives in Chicago, I live in LA. Before, I was not able to get his liver, lungs, or heart because less than 6 hours, I think is the rule. So that's too long of a flight, and I wouldn't be able to get his the organs that I need to survive off of Austin. Transmedics create this FDA-approved OCS system, organ transplant system, to not just keep the heart or lung or oh my God, I'm blanking out. Essentially, keep your organs last long enough so they can fly his stuff out to me so I can get it. They also acquired this aviation company in, I think it was last summer, and a lot of people freaked out about that. I was like, oh, like they're supposed to be profitable last year. Now they acquired billions of dollars, not billions, but a lot of money towards this aviation company. And now it's just going to be pushing out profitability. Why would they acquire all these jets? Like they're an organ transplant company. Like what's happening? When that occurred, I was posting about it nonstop. I was like, this is the inflection point I was waiting on. I love the product that Transmedic was creating. I love investing in products that are A, good business models, and B, good for society. Saving people's lives. That's what they're doing by making these organs live a lot longer than what it was before. So once they acquired this aviation company, I was like, boom, that's their moats. Not just the product. Now they're owning the end-to-end network of it. They're owning the flights, the jets, the product of it. Everything is in-house now, because before Transmedic, the demand was through the roof because, of course, it's a win-win situation for the customers like myself who need the organs, also the hospitals, because that they're in the business of making people live. So they also, I won't get into too much because that's for the Discord group, but like Transmedics, the CapEx required for the hospitals is minimal because Transmedics provides the whole service for you. Like they have the surgeons for you. They bring the product towards you. Like they do everything. So that's why I'm saying it's a win-win for the hospitals and the customers. Like it's a no-brainer. And now they had to acquire this aviation company because demand was so through the roof. They were going through brokers to rent out jets to field this demand. That was unattainable because the demand was, they were just like wasting demand because they weren't able to find enough jets. So they acquired this aviation company. I was like, boom, they own the whole end-to-end process, infrastructure, network effect, similar to how Mercado Libre does. They own the network effect in Latin America e-commerce. That's a massive moat. This is a moat, and it was a $2 billion company when that happened. I was like, wow, I found a monster, and I made a 5% position. I haven't sold one share since then. This is just beginning. This is a growth theme where, unfortunately, we're always going to need organs unless genomics takes off or whatnot, or like somehow autonomous driving prevents all accidents, or what, like, I don't know what, or Ozempic actually cures all illness. That's like, I can't even imagine when that's going to happen, but it's nowhere in the next couple of decades. This will be here and it's here to stay. And it has a clear moat. They're fundamentals are through, like you couldn't pick the better fundamentals on the top line growth and profitability. And their balance sheet could be better, but they just acquired an aviation company. So it takes time to adjust that through the debt a part of their balance sheet. So regardless, I want to add that's the fundamental case, but I kept adding, but I went really hard right here because this is a bottom tell. 5 straight weeks of above average volume on the downside. We had one big week. I was like, oh, that's an above average green candle. First time in 5 weeks with volume. I think we have a near-term bottom. This is the following week. I was like, wow, we bottomed. And I went hard right here, and I haven't sold one single share since then. But the reason I'm bringing that up is like Unity has an similar setup right now on these boom, 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 green candle above average. I think we go have a couple weeks of dominant like green candles for Unity where it goes to 24, 22. Similar fashion where this went from 40 to 55 to 60 real quick, like within 2 weeks. So this is a name that once it recovered the 200-day moving average, it's held it. Even this massive gap up of a 50% move within 3 weeks, it retested it and held and held. I was like, oh, this wants to run. And it did. And retested it again, and it ran. And it's not giving it any signal of pulling back.
I know that's a boomstick, dude. That's like I'm getting the hell out of here.
That's a thesis changing move. People realize the narrative behind this name of this. Wow, this isn't just
doubled their money in less than 45 days.
It's wild, and it's just beginning because on my model right now, like I'm not going to show you guys the price because this Austin and I are launching a product where you guys can see all my 3-year models for all my holdings very soon. This wants to go higher in a couple of years, and it's kind of wild to say because my average cost basis is $50 around there, and I've tripled it, but I'm not selling a single share because it's so rare to find these like mini monster companies that are small caps that have a clear moat in a really interesting growth theme that's a high CAGR. I gave you guys 2 names already, Global E and Digital Ocean. I feel the same way about those 2 companies as I did with Transmedics. It's hard to find these like mini monster names under $5 billion, but I found a couple of them. I have a couple more, and I'm really excited to share with you guys all in coming weeks. But like this name wants to run, it continues to run. The other name, which we talked about, which I don't have over here, was Shift4. This fintech has been getting destroyed the past like all year, past couple of years, but even the most recent month, it's gone absolutely destroyed. But not Shift4.
Really, that volume's really interesting. That's a huge point of contention right there. On
Boom.
Buy and sell side, like that's their pivot right there. It's either we don't see this level ever again, or we see mid 50s and suffer for a while.
Which I don't think we'll see because you know why? The CEO, which is founder led, which he follows me, which is interesting. He bought $12 million worth of shares on the public market the past couple of weeks around this $70 range.
So maybe following your trade picks.
I was like,
he bought his own company.
Or
maybe he's buying it.
Or maybe he's seeing this like, oh, we got to hold this 200-day moving average. I'm going to buy shares pinned to this to make sure you don't break. Either way, I love it when CEOs just don't say that their company is undervalued. They're going to go up and up. They put their money where their mouth is. He's doing that. And I just don't think he's going to he's going to keep accumulating around this range. And this name combined with, let's go on the daily charts. I think the 20-day, I love it when this happens. Let me get rid of this. I love it when the 50-day crosses the 200-day. This is one of my favorite signals. There's a term for it. I'm blanking on the term.
Golden cross.
It's golden cross. That's what it is. As soon as this happens, this wants to fly, in my opinion. Like this is a type of like action. Like I get real bullish. I was like, all right, that's really bullish in the short term on the dailies. If you go on the weeklies, like I called out, it is held their 200-day like a champ. It is protecting $70 like it has conviction. I think this wants to retest the previous high of 84, 85. I wouldn't be surprised if it goes to $100 because It's one of the cheapest fintech stocks out there where they're growing their top line 40%. They have low teen free cash flow margins, and they're trading at less than 10 times EBITDA. Let that sink in. Like they are just, I know it's like a fintech's a highly competitive, low margin industry. Everyone's take rates are going the opposite direction due to that competition. But this is the cheapest of all the fintech names. Founder-led CEO who buys the stock in the open market recently. Technically speaking, it looks like it's consolidating and protecting. As soon as the sentiment changes in this industry, this name will fly. And I called it out right. I forgot where I called it out when we started this. I think it was right here, maybe. I can't even remember.
Shift no, it was right
May, right here. I was like, oh, it's protected and flew with volume. I think this wants to run. So I think that's my two names. Those are the first two names I think I shared actually on our thing, and it's looking strong. And these are, again, small caps. Shift4 is a very small company. That's my edge. I know a lot of people love big tech, love oil and gas. I know what I'm good at. I love researching. I love growth stocks, and specifically in secular growth themes. But I love those like mini monsters. That's what excites me. That's what gets me like really excited to read, learn, because I feel like if I find them early enough, I find my transmedics who turn into three baggers before really it's still in the early innings of their growth trajectory. I'm like, oh my God, that's like, I've always been wanting to find those 10 baggers. It's very, very rare, but the way to do it is finding those clear winners that are worth like a couple $1 billion in market cap, that have a clear moat and a secular growth theme for the next 10 years, and just ride that wave, and you just see your position grow, and it's just like really nice to see. I love it. It's like, it's a weird kind of high. Like when you see Transmedics, I'm up 180% in my position, top 4 position for me, and it just continues to grow. It's like amazing to see. It's like a very fun high.
Yeah, I think so. I was just looking as you were saying that. I forgot back in the day, a while back, I built a screener that detects Golden Cross. It's Golden Cross plus a couple other like key kind of elements that need to happen. And this thing it's unbelievable how trustworthy that signal is, with a few tweaks that your net return will be 20, 40, was 34, 74. 46, call that 115, 130.
Are you sharing your screen for the
60? Chart? I'm just counting them up. I can't show this because this is a little bit of a proprietary model. 150. If you took a max risk at 10% on this strategy, meaning you jump on all the names at the signal, you take 10% risk on the table. So meaning if you draw down below 10.1%, you cut the trade automatically. You are still net profitable. Since if you date it back 6 months, you're net profitable 141%. Wow. So basically the thing I built combs through and screens a little bit further beyond the Golden Cross, segmented by market cap, industry, whatever, but unbelievable. And just FYI, for those of you that are coming to the Traders Paradise in July, our live in-person event, first one ever. Shay, I'll be there along with all the analysts. You will get access to a few of these screeners I built. I've never released them before. I've never wanted to. They're my babies. They are the thing that have built this place. They built my portfolios. They built my ability to trade and made it efficient. You're going to get a taste of some of these, and I'm beyond excited for that. So, yeah, I think right now, wow, just looking at this swing screener. If you date it back one day, you're batting up. Wow. Yeah, you guys are going to get the swing screener. And just from yesterday, you took the top 10 picks again with a 3-to-1 reward to risk. You got 30%, 40, 49, 56, 57, 50% return overnight if you took 8 names with a 10% risk threshold. So basically, when it signals, you buy 8 stocks. Unbelievable, dude. Sometimes I still marvel at some of this. I used to get real into this, dude. I would go hard, and I would spend like 8 hours tweaking a screener just to get it lined up, because you have to back test them for like minimum 6 months, like over and over, based on the frequency you use it. Like this one, I use in 3-day intervals. So for 6 months, I would back test every 3 days and track it. Is insanity. Jeez. Almost lost my mind, but hey, it worked, made a bunch of money, so cool. I also want to point out on shift 4, it did get the go ahead from Stocks Buddy on the weekly at $60. Auto calculated the stop loss at 68, so loses trend at 68. That's where it pivots and flips. So this one is a good setup. Really good setup. I want to quickly go to the Qs because I think this chart is even more interesting than SPY in that like it's mirroring it to a degree, but I think that there's a little more strength in the Qs to kind of outline that idea that we've discussed, like how tech is driving it all. And I will also call you back to let you know, I'm going to even zoom myself in here. Dad told you. I told you, 2021, tech is the new value. That's where all my money is going. Tech is the new value. Value stocks don't exist anymore. Get it out of your head. It is all changed. The AI theme is going to destroy everything we think we know about everything. I shared some research. You wouldn't know, but I shared some research from very proprietary hedge fund. I don't know how much, whatever, fuck them. But some research that was shared with me, and it confirmed everything I thought. So that was cool because like these guys spend hundreds of thousands of dollars paying quants to figure this out, and they figured out the same thing as me, which I'm an idiot. So that should also tell you that like this isn't as hard as you may think it is. We don't have the ability as like retail to leverage the same tech in terms of the bots and scaling in terms of capital contribution, but there is this beautiful little pocket where you can exist and make an unbelievable amount of money, more than you'd ever thought. Trading is the best business you could ever start on your own with minimal to no money and minimal to no experience and see a positive return in 3 to 6 months. It is the only one, I think, that doesn't require you to like quit your job, lose your social life, and just completely become a hermit. So I think looking at the Qs, that's a weird transition, but we're going to go into it. To pull the chart back up, looking at the Qs here, I think I see a little more strength. Stocks base still bullish. Calculated stop loss 461. I know a few of you have been asking because you don't have access to the indicator, so I just wanted to go through the weekly on both of these and show you where Stocks Buddy's calculating that stop loss, so that if you're in a long-term trade, you don't get beat to death. On the SPY, Stocks Buddy calculated the stop loss 532, still bullish, but basically below 532 is your pivot. And be careful if you're in those trades because that's a little dangerous. I wouldn't really be long or short right now unless I was doing passive options income, because sideways action is great when premium's just deflating and going into your pocket. So I want to highlight here, I was going to go back to that screener and look at one. I used to do a small cap pick every week. Believe it or not, AMC is actually on my filter right now, as is Chegg. And I want to talk.
Chegg?
Yeah. Oh, it's on the swing screener. So keep that in mind. But they did get a little bit of a bid poo. They got some volume coming in here. After some sell side really taking control. But again, Stocks Buddy did trigger on the weekly, which means it could have some upside. I'm assuming, or on the daily, excuse me. On the monthly, we were still bearish, but we tested as low as like basically $2-3, right? That's where we're testing now. I don't know how scalable their model is because, or wait, is Chegg the college book one?
Yeah, it's the one that's gonna die. Yeah, it's like the one, the first that AI is gonna kill.
Yeah, my bad. I was totally confusing them with Newegg for a second when I was looking at this chart. So we're gonna disregard that. I don't care about Chegg at all. It's absolute garbage. I don't care if they just caught a bid. It's pointless, so don't look at it. And we'll move to Altimmune, which is a fun penny stock that many have traded many times before their numerous reverse splits. But that's how biotech goes. It's scale to fail, baby. And I feel like a lot of times you can find some quick winners. This one was just triggered. Not a long hold or company I care to know about or invest in at all. But from a technical standpoint, I do think this one is worth a little bit of a look-ski-poo here. Because it's got definite range to, I think, 750. And I know a lot of you have been asking, like, what about the penny stock breakouts? Or I guess it's a little above penny stock now, but it's right near entry at 620 with the upside, I think, to like $7.30. So for a quick scalpy, I think you can get in there and get a taste. And let's wrap it up as we push against the end of the hour here with the golden child, NVIDIA. And let's just take a look at how we've really printed in this market. So, dude, so that MU, that we'll go there, Micron, That options trade ran like 30%. I grabbed it the next day, 30%. Very ashamed to say that I didn't follow my own disciplines and rules to not hold through earnings, and got shelled. So for those that were smarter than me and took the win, congratulations. You had 30% plus on the table. For those of you that are like me and suck, congratulations. You got a 70% loss because you just were being a dumbass. That's what I did. So
should I do some voiceover on Micron's earnings, or we
yeah, dude, hit it. We got like 10 minutes, so I'd say we finish with this and NVIDIA. I think that's pretty much, we've covered it all. Because remember, you guys, those 2 picks are going to be released. Go to Shay's Twitter at StockSavyShay.Twitter. I'm just kidding. It's just at StockSavyShay. The link's in the bio. Make sure you claim that free roll, 100% free, to get access to the Discord, to get those picks. And yeah, go ahead. Micron earnings.
Yeah, so Austin and I always talk about this. In an earnings event, like a major catalyst, you kind of have to look to the left sometimes of like how much has his name ran up ahead of his major catalyst event.
Yep.
Micron had a really strong earnings. So the reason, all right, so voiceover, they beat their revenue by 3%. Their guidance only met, their guidance for Q4 only met, and that's what caused a sell-off, because the anticipation was like the previous earnings cycle was like a clear dominant beat and a guide up by a significant amount. They anticipated the same thing, and that's why the stock had ran a ton before. Like it was up like 80% for the year, I think, ahead of this print or something wild. Yeah. And that's a wild move for someone like Micron, who has like 30% free gross margins. It's been around forever. Like that doesn't happen for a Micron. So what caused the dip? And why did they only meet guidance for Q4? So a couple of things that the management called out on the call was they're ramping up their CapEx, or capital expenditures, to like the mid 30%, I think it was mid 30% range for the next year. And that's a slight tick up from the 32% that's happening right now. They're reinvesting in their business to fulfill the demand for the next 3 years. Right now, they're completely sold out of their products for 2025, and they're log jammed to 2026. And what do they do with that? They charge a 20% sequential price increase because they have everyone by the chokehold. Like you guys know, you guys want our demand, the memory chips, memory side of the chips. We're booked up for the next year. We're gonna show our pricing power, charge 20% more. The issue is like they were investing in their infrastructure, the CapEx side, way more than anyone else anticipated, and that caused the earnings to not grow as it caused the earnings not to expand as much. Like that 20% increase in price, that's a massive, massive catalyst for earning expansion. But that was offset by this capital expenditure spend that they caused, because they want to capitalize on not just this year, they want to capitalize on next year. And in order to do that, they need to reinvest, do some R&D in the CapEx. And that caught all people off guard. And that's why it's sold off. But can you even argue it's sold off really? Because it was down 3 or 4%.
Right.
And it's ran up so much. In my opinion, like that kind of result, estimates were like people were expecting $8 billion. They only got like 7.7. That should have caused like a 12 to 15% downside, at least. Only low single digits. I'm like, all right, clearly people are appreciating what management is saying. Like this, they're building out all the AI related investments to fulfill that demand next year. So this is turning into like they're pushing all those gains that they come out this year to 2025, and people are forward looking. And I do think this name will probably hit another high this year. Like it's not, oh, it's a bubble bursting. I think it's now going to digest, but I do think it's going to probably retest those highs very quickly, because the memory component of these chips, like it's an absolute must. And if they already had a 20% price increase in Q3, what's it to say they're not going to have it again? Like, I know right now they're anticipating a 12% increase in prices for Q4, but I wouldn't be surprised if they did even more. So like, I do think, again, this may be a story of like maybe all the hardware names, they do similar action in Micron where they increase their CapEx or their R&D because they know this secular growth theme isn't a temporary thing. It's a potential forever thing. Oh, not forever, it's for the next decade. So rather just do all the CapEx requirements now so they can like print cash down the line. And that could be the case. But either way, this is a perfect example of like it wasn't thesis breaking quarter. It was just a slight investment that affected their earnings. That's why sometimes a good thing to buy commons rather than buy options for earnings, because it's way less risky. Long term, you'll make more money if the thesis isn't breaking. So that's what happened to Micron. Wow, this is a very interesting point, actually, at this chart. I didn't look at the chart.
Very interesting. Yeah, look at that. It actually violated trend from February. This is a dangeroo. This is a no good, no bueno. Right now, I think for Micron, I think where we're at right now, like we need to see it's like, and again, remember, this is the daily, so like we could easily wick this back up or pick it up, but it's not looking good. I think like we talked about on that stream, dude. I mean, the reality is like unless they come out with a bang, NVIDIA case in point, they crushed, they ran too far, but the earnings slapped so hard, the stock couldn't help but continue to run. We didn't see that here. We saw good earnings, right? But good earnings that should have put us up 5 points from $1.25. We should have been trading at 125 and seen a push to 130s plus, not trading to 150 and then pricing out earnings that are not going to move the needle. Like we would have had to see an unprecedented beat in earnings. And even then, I don't know if there's any gas in the tank in the market, dude, because NVIDIA used it all.
Yeah.
I mean, there's only so much gumption one may have, and I don't think they had it. And I think
so. If you look at the weekly chart, there's 2 buying points if you want to get into Micron still.
It comes to weekly.
Yeah, there's a massive volume shelf at 117 from if you use a VWAP from that clear breakout on February 19th of this year. Big volume shelf at 122. Then if you look at the 21 EMA, it's perfectly bounced at that point throughout the last year, and that's at 117. So I think I actually wouldn't own it right now until this shows some recovery, because it looks like maybe it violated that daily chart. That's a pretty big violation. But or look at that. Yeah, actually, geez, maybe we don't get that opportunity.
Yeah, I don't think so. I think if juice comes in, it comes in for NVIDIA, and we just continue from there.
Yeah.
Like, I don't like this little hanging guy here, but I also know that, like, if we look at him on par, like short-term trend strength, right, still strong. And then if you go a little further back to say, okay, like, what are we really looking at here? That's kind of like our max pain, I think, for NVIDIA. And then if we go even further out to say, okay, like, where have we struggled, right? When we're determining trend channels, we always want to trade off support and resistance. This is a pivot point, right? This was resistance until we broke out at 114. Now this is functioning as our support, which means we're just creating a little wedge up to 137. Here's your point of confluence, 139 in October. We hit that and continue to consolidate. We're going to see another move up. As stupid as that is, I think it's also important to like take notice of like their growth is like what they're doing is not, there is no comp. There's no comp. You can't say, look at Tesla here. There's nobody you can say, let's look at and make a comparison. So I think that as far as like their power to skew delusion far beyond what everyone would go, they have it, dude. Like they have it. So many people are scared to miss the run. And I'm talking competent people. Like I've talked to some competent people in like the RA space and that are like, I missed it. And I was like, I didn't. Cool. That sucks. Sucks to be you. You should have known that. You know, it's kind of your job to know that, and you didn't, but whatever. But that are still unsure. And they can look at the valuations and the business model, but like, again, sometimes it doesn't matter. But the beauty with this one is like the sentiment is there and the business is there. The growth is there. The store, like everything lines up on this one for me to say, like, I'm not going to question any of it. As crazy as it may seem, why would I question more upside? You know what I'm saying? Like I feel like I'd be more of a stooge to be Mr. Countertrend than anything else, because what can I argue with? What's my point I get to stand on? None. Well, zero.
There's 2 camps as an NVIDIA investor. A, you believe they have an absolute monopoly that's going to last 10 to 20 years. Similar how Google has a monopoly in search for the last 2 years. You're seeing what happened, 20 years. You're seeing what happened there. So if you think it does look cheap right now, the argument is this an actual monopoly or not? because if it's a monopoly, buying here in Nvidia, it's fucking cheap. It's going to go higher. But if you think there's going to be competition headwinds from AMD and Intel, maybe ARM Holdings gets into there, or big tech, who knows what, then maybe it isn't. But that's the point of like, to make these massive moves, you kind of need two sides of the argument. Like if it's all one side, you're not going to see the velocity of the move like we've seen in NVIDIA. So I'm part of the camp where I actually just recently sold my AMD position this week. I just made the decision where, listen, NVIDIA is 2 years ahead of all other competition, and their innovation window is getting quicker and quicker. It's within a year now. So I think this monopoly is actually real, and this cyclical argument is going to turn secular real quick. And once that happens, this thing will fly even more.
Back to 200, back to 300. It's gonna be wild. But yeah, I couldn't agree. All right,
like, it could be a $10 trillion company by 2030. That's a wild thing. It could be.
There, you heard it. I got a call. I completely forgot. Love y'all. This is fun. We covered a lot. Hit that link. Join the Discord. I don't know if you want to repost it one more time. Go to his Twitter at StockSavyShay.
It's in my bio. The link's in my bio.
Get the link. Get the pics. Love y'all. Stay blessed now. Bye bye.